Hey everybody. So in this video today, I'm going to talk about a big loss that I just took. In fact, it was over 99% on one single stock. All right, we're going to look at this and see again, why did I do it? What was the outcome? Why was the outcome such? And how does it affect my overall portfolio? So let's talk about it. It was SBNY, Signature Bank. So just before it was halted because the government took it over, I took a long position just above $90. Today, I sold that position when it opened up on the over-the-counter market for 58 cents. So we're talking north of 99% loss here. Now, the key is this. Number one, why did I take it? Well, to be honest, I didn't necessarily think this one was going to fail. So it was like a miscalculation. It was a mistake. There's no doubt about it. But the question is, can we survive mistakes? And the answer is absolutely. So let's talk about that today. So the key was I put 1% of my portfolio in it. And again, I did that on purpose because it was a high risk technical play. All right. Again, technicals tell you with a high percentage chance that something is going to happen. In this case, there was about a 70% chance based on my calculations that it was going to rally up. I could probably make 20, 30, 40% on it. That ultimately didn't come through. Remember, probabilities by nature, they tell you this is the probability. It doesn't guarantee the outcome. So ultimately, it was a wrong decision. The probabilities, the 20, 30% probability that it was going to collapse, that ultimately came to fruition and it collapsed. But this is the key, folks. The key is that it was 1% of my portfolio. In fact, again, the beautiful thing about it is today alone, I closed out an 11 and change percent gain on Alibaba. Alibaba opening up over 10% today. Beautiful move. We had a long position. And the key was this position size. It was 3.6% of my portfolio in Alibaba. So just there alone in the Alibaba trade, I recovered over half or about half of my loss on SBNY. And again, this is the key. A lot of people were asking me, we were in SBNY, and a lot of members were saying to me, should we add to the position? We were down on it initially 10, 15 bucks or so, which was about 15%, give or take. And I said to them, no, the answer is no, because this is a risk assessment. So again, the key here is understanding that you can take risky scenarios, but it's all about how much money you're willing to allocate. If you allocate too much and it collapses on you or it goes bust, you are going to take a big loss. In this situation, it was a calculated risk, a risk that by all means did not work out. But ultimately, again, one trade, one winner closed out today. Boom. We've already recovered almost 50% of that loss. We have one more trade. Boom. We're back in the green overall. And that, again, is what most investors don't understand. They think that every trade they go into, they have to go in heavy. You don't have to go in heavy. Sometimes you have to analyze the risk. And remember, every trade you take, there's a different risk scenario. And so some positions, I'm going to go in heavy because, again, it's a very low risk. Like if I'm playing the S&P 500, what's the odds of the S&P 500 dropping more than 2 or 3% in one day? Very, very low. We're talking about probably 1 or 2% of the time. That happens very, very rarely. However, when you're dealing with banks like SBNY, Silicon Valley Bank, that can be a higher chance. So you put a small amount of money. So it's risk assessment is one of the key factors for how you determine how your overall growth is. And this is how I've consistently made money over time, is where I'm going to take little shots here and there. That's okay to do. The key is, what amount of money are you putting in? What are you risking? All right. It's the same thing when you're trading options. I don't like to trade options because it's a little on the riskier side. But ultimately, if you're doing options, you have to be ready to say, okay, this option could expire worthless. It could be worthless. All right. In this case, with Silicon Valley, with SBNY, Signature Bank, that's exactly what happened. It was halted. It reopened. There was no chance for me to get out at any other price than where it had closed that previous session. And then ultimately, that's a loss. But it was a calculated risk. And ultimately, that is the key, folks. So remember, if you're going to take a stab at something that's high risk, and this goes with crypto, especially some of the shit coins out there, you have to be willing to understand your risk assessment and put the proper amount of money on the line that you say, okay, if this goes south, what am I losing? Now, in the case of this SBNY, I lost 1% of my portfolio. A $100,000 portfolio was essentially worth $99,000 after that loss. And again, all the way back about 99,500 following the gain we took today on Alibaba. So that is the key, folks. And again, you can find these trades at inthemoneystocks.com. Take a look at the track record. Again, we have about an 85% success rate in verified investing alerts, which is the service that I do. And the gains are absolutely remarkable, folks. Again, It's important to talk about our losses, though, and that's what I'm doing in this video, but also showing you that position size is everything when it comes to keeping your risk in check. You guys have a great one. I'll talk to you soon. Take care.